Well, when we think about what is driving markets today, in our mind, I think the Fed's dovish pivot that we saw earlier this summer and the subsequent easing of financial conditions has really been one of the most important factors for markets. So notwithstanding a big disaster in any one of these key names this week, we think those are probably one of the most important factors.
So Tim, as we talk about the number of companies out there, the Fed interest rate cuts are certainly going to be a huge part of the story.
Yeah.
But we have 130 S&P 500 companies, all with their own stories to tell. Is there any industry group in particular that you're looking at with regard to that big earnings calendar that we are showing right now? Is it the likes of, say, a Caterpillar because of Chinese trade? Is it McDonald's because of that consumer story that's here in the United States? Or is it a company like Amazon or Alphabet because of that whole FANG momentum trade?
Sure. Well, I think you bring up a couple of good points there that are worth unpicking. I think the first one, like you mentioned with Caterpillar, industrial bellwethers are going to tell us a lot about how big this slowdown really has been in Q2 and leading into now, and what impact trade conflict has had more on sentiment and forward-looking guidance. And so when I think we listen to some of those key names, that'll really give us a picture of the extent and the depth of turmoil related to trade. That being said, I think on the consumer side here in the United States, we've seen continued really strong news. And I think that will be set to continue and be one of the key drivers for this cycle going forward. So I think those are two good areas to watch as we look at this week.
The strategy you have set out that you're telling clients about right now factors in a Fed interest rate cut, a holding still. Is it 25 basis points if they do? Does the Fed cut 50 basis points? What in your mind is the market positioned for right now?
Well, when we think about positioning for the market, I think there was some anticipation of a 50 basis point cut this Friday earlier in the month that's now subsequently been walked back. And our base case and what we're talking about when we build our allocations looking forward is a 25 basis point cut. And we don't see this as necessarily the start of capitulation on the Fed's part, but rather just a gradual easing of financial conditions away from probably some additional tightening that wasn't necessary last fall.